Welcome back. This is a super important video. In this video, we will be running the math on whether or not Palantir can become a $1 trillion company. And of course, before we do that, we first have to identify the time frame in which we're doing this analysis, right? Because Tom Nash, who I'm a big fan of, I pretty much agree with, I would say, about 80% of the stuff he says in the content that I've seen. He's been pushing since October of 2020, I believe, when he started covering Palantir, that it had the potential to become a $1 trillion company. But the question really isn't, can Palantir get there eventually? The question is, can they get there in a reasonable time frame, let's say by 2027, 2030, or never? So it looks like, based on his poll here with 1,000 votes, most people that voted for this, that follow Tom Nash, that are big fans of Palantir, obviously, expect Palantir can hit a $1 trillion valuation of $500 per share in 2030. Now, this is initially something I very much disagree with, right? Why would we set such a lofty target? Why does Palantir need to 20x for this to be a worthwhile stock to be invested in? I think it's coming at it from the wrong standpoint. Now, I'm not saying Tom is wrong to put this target out there. I'm just saying, in my analysis of the company, I'm not looking for 20x or nothing, right? I'm looking for results that I can get behind and a valuation that makes sense to me. So with that said, I just published, after Palantir's 10K, the latest update to indomitable.app, which I will be opening in just a second. You can follow the X account here, totally free to view all of the metrics. It is all up to date with the latest results for fiscal year 2023 that Palantir just published, plus the latest Wall Street consensus expectations for every single data point. Again, find the link in the description if you're interested. This entire dashboard, totally free. If you do want to create your own forecast, it's just going to be $5 due to the data costs that we have. And that's what we're going to be doing in this video. We're going to be running through a revenue build, margin expectations, and generating our valuation model to see, what does $1 trillion look like? Now, this is going to be a 5-year model that we are running through. And let me first tell you, when I was plugging in these results manually from Palantir's 10K, it is staggering. Just from when I did this last quarter to where we are now, substantial increases. And that's why you've seen the stock increase so significantly. It is not unjustified, the increase that we've seen in Palantir this year, and that's because they beat expectations so handily, and Wall Street had to boost their estimates so significantly that it's cast forward into the stock, and I don't think the boost in Palantir's stock price has been unjustified at all. So with that said, the way this is set up is these are all of Wall Street's expectations, and we are going to adjust these drivers as we see fit. So total government customers, let's adjust this slightly. I think Palantir is going to continue to outperform in the government space versus expectations. Expectations are pretty low. So let's just leave it like that and click update. As for the average contract value for government, I'm going to boost this again slightly. I think we've seen Wall Street has underestimated fairly significantly for Palantir on a number of different metrics, and so we'll update that. As for the total commercial customer count, this, I think Wall Street is going to be significantly under on. When I was putting in the numbers, I saw a significant boost, but their expectations are just laughable on the commercial side of things. So let's really push this. Let's say they're able to significantly increase the customer acquisition that they're doing. And let's say maybe 5 years from now, 2028, they hit 1,000 commercial customers. You could say this is low, you could say this is high. This is what I'm putting in, so I'm going to press update there. We're going to see what happens if Palantir is starting with this year of a 344 or so and really pushing it there to triple their customer count in 5 years. Sounds fairly within the realm of reason to me, especially given the success we've seen with AIP, but we'll see what the results turn into at the end. Once an organization uses AIP rather than using Foundry for the first time, I think they're going to continue to spend with Palantir, and I think this is going to rapidly increase net dollar retention because they're increasing their spend with Palantir over time. So we can say the average organization is spending probably not 5 million. We could go with 4.7. Let's go with that. In 5 years, the average contract value for a commercial contract is 4.8 million. Let's call it that. So now we're on to the margins. And again, totally easy to play around with this. the gross margin expectations are a little weird. So let's flatten these out because Wall Street seems to have some divergent opinions. But I don't see why Palantir's gross margins are going to contract next year. So I'm just going to flatten this out, and let's say they just expand as expected up to about 86%. So let's update that, watch it update in the graph. As for sales and marketing, I'm actually going to increase this slightly from the Wall Street expectations just to make sure we have a good enough expense in there where the sales team is growing. We talked about in a previous video new sales program expansions and how that's going to benefit Palantir. So we'll just raise that slightly from expectations. As for administrative expenses, I think we can largely keep this in range. I do like that contraction, a little bit of operational leverage there. So let's click update to lock that in. And research and development, this is going to be interesting, right? I pretty much agree with this. We could even bump it up a little bit just to make sure Palantir is spending in our analysis here on what matters to the business. And click update there. And we'll just say R&D stays flat for the next 5 years. They continue to invest in the business. So now that we've done all of that, we can generate our income statement just by pressing generate. And this gives us all of our expectations. So in year 1, 2024, we have them doing 2.7 billion all the way up to 8 billion in 2028. What does that look like on a breakdown between government and commercial? 3 billion government, 5 billion commercial. And we have the inflection point occurring in year 3 where, let's see, that will be 2026. Their commercial becomes larger than their government business. As for operating income, we're going to be putting a multiple on that in just one moment, but going from $1 billion to over $3 billion in the next 5 years. Now here's the super important part. How do we value these cash flows basically for Palantir? What are we doing with them? I'm going to be a little bit more aggressive on the numbers that we're doing in terms of a multiple for EBIT because of just how significant we've seen. Nvidia is now valued at $2 trillion. We know their multiple is crazy because of the growth they're expecting and the future dominance that they're going to have. The market's willing to pay for that. I think Palantir could have a equally high multiple, and this is just over the next 5 years, right? Their growth is going to materialize over the next 5 years. It's not going to stop over the next 5 years. So with that said, you could totally play around with these multiples and disagree with me, but let's actually calculate the stock prices from here. So what do we have? We've got about $20 this year in 2024, $26 in 2025, $36 in 2026, $47 in 2027, and $65 in 2028. So based on these numbers alone, it looks like Palantir is fairly valued or at least a little bit overvalued for this year. But I think that's because they're actually trading at a much higher multiple due to, we know, the coming S&P 500 inclusion. We know they're one of the very few profitable AI companies that has a tremendous trajectory ahead. So potentially I underestimated these multiples a little bit. So let's say if we want to figure out what fair value is for Palantir, what does that look like from a multiple basis, and we can back into that. So we can say if they're trading at 70 times their EBIT for our expectations, what does that look like? Okay, there we go. There's $24 per share this year. So I didn't change our long-term outlook. So $65 in the next 5 years. It's actually less than 5 years at this point. What do we think of that, right? 65 versus 500. So the question becomes, what are the metrics that we would need to change from what I felt was a very fair base case assessment? What would we need to do to turn this into a significant bull case? Now, I really don't think it's around the government side of things. I think the government business isn't tapped out, but it's not going to be the real growth driver, right? So we also have them scaling to 1,000 commercial customers in 2028. But what if we said the average contract size in more of a bull case situation was much higher, right? So what would that really look like? We could just adjust these sliders and we could click update and watch that reflected in the graph. Our margin expansion, we would want to see more margin expansion. So I don't want to go too crazy here with the gross margins, right? Because these are pretty sensitive, but we could update that nonetheless. And let's say for selling and marketing expenses in a bull case, they really could reduce this and have more of an operating leverage, as well as the administrative expenses. Again, I don't want to go too crazy with this because we are still going to need some admin, but let's say that does fall off a little bit. R&D, however, I do want to keep where it is, right? Because we want them investing back into the business in terms of developing new products that allows them to grow so quickly. So I'll click generate once again. And here we have now more like $4 billion in operating income. And what we will do is we're going to actually boost our multiples, because if they're growing faster, investors are going to be willing to pay more for the business. So let's say about 55 times EBIT. And of course, you could keep playing with these. You could see like, what would it take for Palantir to be $100 in the next 5 years? That would be a 5x from where we currently are. So there we go, about $100 per share based on our expectations, 70 times EBIT. That's what would be required in our estimation here, right? And a lot can change in 5 years. But if you want a 5x in Palantir in 5 years, it's going to look something like this if you want to see $100 per share. But the important factor is this doesn't include any buybacks, which is going to reduce the number of shares outstanding, which means that the share price is going to be higher in the long run. So it doesn't include any of that. And this is only a 5-year forecast. So in my opinion, is Palantir going to be worth $500 per share by 2030? No. Could it be north of 100? Sure, that's another 2 years after this. I think the business is going to continue to compound, and I think it's going to be around for a very, very, very long time. But do I currently see the pathway to a $1 trillion valuation in the next few years, in the next 5 years, even in the next 8 years or whatever it may be? No, not at this point. But the point of making this video is it doesn't have to be a $1 trillion company, right? Not every company is going to be a $1 trillion company. Is Palantir going to be a $1 trillion company in the 2040s? Yes, I think that's much more likely. To say it needs to happen by 2030 or set yourself up for disappointment, I don't think is very worthwhile. So I wanted to make this video to show you my expectations. You can check out this site that I've built, plug in your own estimates and everything like that. But I'd love to hear your thoughts in the comments. Until next time.